Canadian investors are using ZSP over any other ETF for exposure to the S&P 500 index. Institutional investors, investment advisors, and DIY investors have all been trusting ZSP with their investment dollars since the fall of 2012. ETFs provide instant access to a portfolio of stocks to an investor in a single, cost-efficient trade. For an investor to own the entire index would require institutional-level trading systems and expertise. To accomplish this, an investor would have to buy 500 stocks at a time, and then as the market moves, it would constantly have to rebalance those 500 stocks several times a year. ZSP simplifies this process by aiming to provide instant access to the 500 stocks in the index in a very easy and low-cost way.
Before we get started, I just want to remind everyone that this information discussed today is not intended to be or construed as investment advice. Please consult a professional advisor before putting a Loonie in any of these financial markets.
The dirty secret is that no one's ever going to get paid back.
People have the shortest memories when it comes to investment.
We just got to get Keith into Bitcoin.
Hey, there's a bubble. Welcome back to Loonie Hour, episode 146. As always, joined by Boomer, Keith Dicker, IceCap Asset Management, Rich Diaz. What's going on, gentlemen? Everyone's laughing here. This is the first time in 146 episodes I have butchered the intro. This is take number 2. We made it.
The first one was funny, but don't forget the lost episode. A couple of years ago,
that's right.
Yeah, we recorded an entire episode. Well, we didn't record an entire episode.
I was going to say it's in the cloud, but it's not actually in the cloud. It's gone.
I think it's in my DM somewhere. We'll have to look for it.
Those DMs got a lot. There's a lot going on in those DMs.
They do work. We're in a very acute world. So I'll share with you a story, okay, that somewhat ties in with Loonie Hour stuff. So I'm over on PI, Prince Edward Island now for a couple of days with Mrs. IceCap. And so if you ever come to PEI, it's beautiful. If you've never been here, please come. It is quite nice. So we're getting the ferry over, and the ferry was coming over. This was yesterday. We came over on the ferry, and it was in the morning. So around the same time when we had the big Bank of Canada event come out. So if you've ever been on a ferry before, all of a sudden it goes ding, ding, doo. And then the captain comes on.
What does it do?
Is that right? How do you hear it when you're on it? Maybe my hearing is off.
God.
Have you been on a ferry? Not a cruise ship. Yeah, it's a ferry. What does it sound like? You know, when the speaker comes on, what do you hear?
I don't know what ferry you're going on, buddy, but keep going.
Okay, over here, the Northumberland Strait Ferry Limited. Anyway, it's the captain speaking. Just let everyone know, the Bank of Canada cut interest rates by 25 basis points, and the whole ferry went, yay.
Are you kidding? Did that actually happen?
No way, that's a true story.
That's a true story. So it's a good point in that one, it's really cool. The whole world now is global macro, that's pretty awesome because, you know, you're coming over to the nerd herd. But I think it also shows how much of a bubble the world has become, especially here in Canada, with everyone, even the ferry captain, announcing that they cut rates. It's a big world, guys.
Got 5 condos.
Yeah, that's right. It's locked in a variable mortgage rate.
So, Rich, where were you when they cut rates?
Where was I when they cut rates? I was up north, and I missed yet another major political announcement. Thankfully, that's it for me for the rest of the summer. Probably
We need to get a Loonie Hour GoFundMe to get you some Starlink on that site.
Yeah, that's right. No, Joe Biden stepped down. So one man, I shouldn't go up. Everything's happening on Saturdays and Sundays. No, but that was on a Wednesday, right? Or the decision. I was watching it. I watched the presser. Carolyn Rogers is spitting hot fire, and
she was looking good again.
Yeah, she's great. And Tiff Macklem was getting annoyed with the reporters that continued to ask him. It's like they ask him what the interest rate path will be over the next 3 or 4 months. Like you're a reporter, you're a financial reporter. You have one question because they only let reporters, and that's what you ask Tiff. Are you guys going to cut next month? And he's just like, and God love him, he's so polite and nice. And he's just like, we're not going to pre-commit. And inside, he's probably seething. Like, you fuckers, just ask me.
This guy was like, what did he say? He's like, you have 3 more meetings. Like, is it reasonable to expect rates will be 75 basis points lower or something?
It's like he can't answer that, nor should he. So like ask something, any other question.
It's a great
Anyways.
point, Rich, because I mean a lot of the questions are very good. Some of them are well
Yeah, that's
thought.
right.
But for if you are anyone listening, if you are a reporter and you're invited to one of these events and that's the question you're going to ask, that's pretty bad, pal. It doesn't get much lower than that on the quality
The
scale.
Loonie Hour needs to get their media card.
Yeah, that'd be awesome. I mean, I want to go. I want a little lanyard with a picture, press pass.
We would have some fun questions. I know that.
Then you could finally meet Carolyn Rogers in person.
Yeah, that's right.
But she would have to compete with your so we had the Montreal event last week, Montreal social event, and it was amazing. It was fantastic. It was amazing. I had so much fun there. We had a really good turnout. We had some nice, real nice time. Rich had his little groupies following him around all night long. Yeah. And so I think Carolyn might have to compete with your groupies, Rich.
Yeah. Well, I want to thank everybody who came out, especially my friends. My three friends who came out to support us. But yeah, it was great.
All three?
Yeah, all three of my friends. One of the questions that relates to our earlier take two is that we actually keep getting asked. I keep getting it's like, do you guys ever do edits? Do you guys do you do edits? Do we do takes? And no, I'd say people are quite surprised that we do this off the cuff, believe it. I'm not that surprised when I listen to it, but yeah, people seem quite pleased and impressed that we always do it.
I think in the production world, it's called a continuous shot, or there's some word for that or phrase.
That's right.
I mean, you start off and you it just carries throughout the whole scene.
It's called winging it.
It's good.
Anyways, Keith Boomer, we got the BOC cut. Rich, you do owe us a Twinkie there.
I do owe you a Twinkie.
Shame
I'll
on
eat
you.
it. I'll eat it in shame.
Boomer, what was your thoughts there? Market reactions, financial markets particularly. I mean, it was kind of priced in. We talked about this last week. It would have been weird for the BOC to go against the grain, given that it was so heavily tilted towards a cut. But it looked like the Canadian dollar sold off a little bit. I was watching the 5-year bond yield that came off a little bit. So just kind of curious your reaction there from a market perspective.
Yeah, well, the reaction on the ferry kind of surprised me. I wasn't expecting everyone to be supportive of the rate cut, because those who are supporting the rate cut, it means you're probably a homeowner or you're wanting to buy or who knows what. But let's sort of reset it. If you don't have debt and you don't have to pay, interest on debt, you actually want rates to stay high. You want to earn your income coming in. And that's what's really, screwed everyone over for a decade. It's called socializing the bad debt problem. And that's what they did around the world. They put rates to zero.
Like a boat with like a timeshare thing.
Now, this was one of those hardcore ferries. And anyway, that was good. But anyway, the gist of it is, on the ferry, they all love the rate cut. But back to the real world or financial market world, we said this last week. Remember, we said, hey, if they cut rates, there shouldn't be a big reaction from it, because it's what was, everyone except Rich, was. What did you just do to your Twinkie?
There's a garbage next to me. I put it away. I ate the whole thing. Don't give me that's enough diabetes for one day. Thank you.
You crushed that, man. That was good. But market reaction, it was what I expected to be, because it wasn't a surprise or anything like that. So I wasn't that.
Rich,
but Keith, just to touch on that, it's there was other people on Twitter who were celebrating the rate cut, and I would just be careful what you wish for, is what I would just simply say, because it's not like I don't think it's success. I think it's an indictment on our economy. We talked about towards the end of last week's podcast, we talked about all the things that are going wrong with it. There are a few things going right, but
can I frame that up for you?
Sure, shoot. Sorry.
So leading up to the presser, we had Doug Ford was out doing his shtick. So he said in his press conference, Tiff Macklem needs to get his act together and start lowering interest rates at a lot faster pace. And then following the cut, the Liberal Party tweeted, breaking, the Bank of Canada just cut interest rates again. We're growing a strong economy that delivers for Canadians, and there's still more work ahead.
So which is
by the
it?
way, if they're growing a strong economy, you're not exactly cutting rates, by the way.
Of course not. It's ridiculous.
Christopher Freeland was tweeting as well. The Bank of Canada cut interest rates today. Canada was the first G7 country to cut rates last month. We are now the first G7 country to cut rates for the second time. This is good news for Canadians and is thanks to their hard work. Our economic plan is working.
Is that the parody account, or did she really?
This is like that's an actual tweet. So the plan to torch the Canadian dollar is
okay,
well underway.
Christia, you have to stop with the G7 stuff. Just give me a little suggestion there. It's not a winning strategy. So let's go through this. I mean, what's really coming out here now? Right, the cut rates, but we are slowly almost hitting a slippery slope. And I know here on the Loonie Hour, I think we were ahead of the curve. And maybe sometimes you can be too early on things.
Yep.
But yeah, that can be true. But it's now increasingly looking like more and more people, investors and groups and policymakers and politicians are realizing, wow, Canada could potentially really roll over here. And that should be a fear. It shouldn't be something to be celebrated. Like, for example, we'll go through the rate path right now for BOC. It's basically guaranteed. We have 3 meetings left for the rest of the year. It's now guaranteed by either the October meeting or definitely December. We'll be at 4%, so another 50 basis points cut.
Wow,
but
so
what's happening?
Markets are pricing in another 50 from here.
Yeah, but that's what it was last week as well before,
Yeah.
right? But now it's the probability has gone up that it will likely happen. But now this is the cool thing, from the geek world. I just noticed Rich sort of moved up on his seat then when I said geek world. But in the geek world, Citigroup, for example, they said, hey, don't rule out a 50 basis points cut coming out at some point. So for, one of the big banks to suggest that, which is, a pretty big move, again, that should tell you that, hey, there's something else happening within Canada. So I know we had a couple other data points in Canada come out over the last few days and things like that. But again, now we're starting again, I always talk about the path or the trend or the journey or Aerosmith that we're headed towards. And it's not changing. It's still going straight down that middle. And shout
out to our buddy, friend of the show, Ben Rabideau, who's hosting the next Loonie Hour live at his cabin there. But he's been all over this. He was a guy that, I don't know, 3-4 months ago said we'll be talking about whether we should be doing 25 or 50 bips, come the fall. And maybe we're starting to get there, and that's probably not what a lot of Canadians necessarily want to hear, that are hoping for a sort of a cleansing of the system. And there's a lot of people that don't want to go back to like this. Not that I think we're going back to zero interest rate policy, but I think that there's certainly a cohort of Loonie Hour supporters and Twitter people that want to see everything kind of blow up. So
well,
what is the ad? But what's the address of Ben's place again?
Yeah. It's in the description. Check the show notes.
Ben texted us a few days ago. He said, "Did you guys just announce you're having a party at my cottage this summer?" It was funny. But let's go a bit further into this. So again, Canada now, the downturn that we, forecast could very likely be happening. It's now clearly happening. So like 2 other stories that popped up for me over the last few hours. One specifically says shorts, big bet. Let's start again. Shorts bet big against Canada's banks as lending looks dicey. So we've been talking now for quite some time and following what the banks are provisioning for bad loans on a quarterly basis. And that's a real geeky world data point or metric to be into. And again, Loonie hour, we're ahead of the curve. We've been focusing on that because that is very important. And now other people around the world are starting to tune in this. So I have several people I know in my network outside of Canada, and now Canada's popping up on their screen. And it's not popping up as a place I want to go and invest in. It's a place, hey, what do I short there to make money? So they're not shorting the Loonie hour. They want to go long on the Loonie hour. But this article here, it starts off by saying traders are betting against Canada's biggest banks as the risk of mortgages and other loans going bad increases with the economy still struggling. And that's exactly what we've been, suggesting where we're headed going down so far. What do you read into that as well, Steve?
I mean, I think that there was just a lot in that monetary policy report that I think we can really unpack. I know Rich was kind of reading it and sharing it, but like, I don't know, I sat down, I watched the press conference live there on YouTube. Funny enough, I think the Bank of Canada's website was down, so I had to go on YouTube.
No, it's not. I watched it. I watched it on the Bank of Canada.
It was down,
website.
man. There's a bunch of Bloomberg reporters that were tweeting too, like, what the hell is going on?
I watched it on the Bank of Canada. All right, go.
It was definitely down. I had to go to YouTube to watch it. I just felt the press conference was very dovish. I just thought, he highlighted excess supply. He just kept talking about excess supply, that the economy, the demand had obviously weaned, and now we're in a situation where we have this excess supply. He certainly didn't pre-commit to the future rate path, but I think he said it without saying it, which is they're seemingly a little bit more concerned now to the downside about the softening in the labor market that, he mentioned. Obviously we have all these newcomers, people coming to the country, and they're unable to find jobs. And not only that, they're obviously competing for everyone, for those other jobs. And so I just think that clearly there's some concerns with the slack in the labor market. The unemployment rate's up, a full percentage point since last summer. And so I think everything I read through that press conference was that, like, more cuts are coming, and I'll be kind of curious to see how this all overlays with what the Fed is going to do and what these other central banks are going to do. Because like I said, I mean, the key theme of this show has been the release valve is the Loonie. Not the Loonie hour, but the Loonie, the Canadian dollar. And
that's the theme of the Loonie hour?
I don't think so. But wait, then let me just add one more thing. Just so on before we get on to the monetary policy report, I just want to add something to Keith's point, which is the shorts are coming on the banks. They've underperformed, but also, I'm looking at credit growth. So there's government credit, there's government bonds and loans, then there's households that have credit growth, sort of unsecured credit growth mostly, and then secured credit goes mostly in the form of mortgages, although the house credit lines can be secured, I guess. And then you have non-financial corporates, and they obviously borrow. The corporate bond market is not insignificant in Canada, but obviously for your sort of working capital and your sort of daily stuff, you'll go to a bank in search of loans, and that is now in negative territory, just let's say zero, just to be generous. So your year-on-year non-financial corporate lending in for Canada is negative, and that's
really?
Yeah.
When's the last time it went negative, Rich?
From non-mortgage loans, and the last time it went negative, take a wild guess, was after COVID, in the months after COVID. So basically in late 2020, and before that, as far as the data I have, the chart doesn't go back that far. So for the previous 20 odd years, it was never negative. So even when you're in recession, you still might grow your lending in order to meet some liabilities and stuff that you have, but it's going negative, which is very, very bad. And so you could argue that people are moving away from banks into the corporate bond space, but either way, it's not good for banks, either because you're either not lending, you're not churning your book and not originating loans to make money, or it's an indictment on sort of the growth and the prospects that these non-financial corporates have for future, for their future ongoing concern. Or either way. And the third option is, that the banks are sort of pulling back on they're tightening their loans. And in fact, if you go on the Bank of Canada website, there's a there's a loan officer survey, and you can see that in fact that is happening. The banks are starting to pull back. Not only they're provisioning, Keith, but they're tighter on the lending standards, and they're asking for higher spreads.
Yeah, absolutely. And that's what you would do. I mean, banks, it doesn't matter if they're in a recession or not, they'll always lend money. That's what banks do. But I suspect that all of the, and all the banks now on the credit departments, it's no longer, you put a mirror in front of someone or their dog and it's, yeah, we'll give them 4 mortgages, no problem. Now they actually have to start doing what a good banker will do and get a bit better with the credit analysis. But back to Steve's point, I mean, earlier you said, hey, this is going to get, you talked about the Loonie hour theme. I didn't mean to move away from the investment theme that we talked about. It was more like, hey, we're being funny. But Steve is absolutely correct. When we get these changes now in the economy is growing, and as we're seeing now in a lot of Canadian media and stories, we're saying, hey, the Bank of Canada is willing to diverge away from the Americans with the Fed, with their monetary policy. That should tell you, hey, it's the currency that could potentially do something, in addition to the other markets that we're seeing as well. Just continuing this is something I think Steve, you brought this up as well. Steve's bringing up all the cool stuff on this episode, Rich. You're a bit lacking.
It's because of the Twinkie. It's because of the Twinkie.
Get into his head, all that gluten.
It'll kick in a second. But one of the, one of these other articles here, it says Bank of Canada changed its tune as consumers show they're hurting. So Bank of Canada Governor Macroeconomics is so confident the central bank has crushed inflation. They crushed it, Rich, that he's tweaked its decision-making process, and they're now setting interest rates to prevent price pressures from slowing too much. It almost appears like they believe they can actually control inflation and growth and all this stuff. So my point with that is, they're always playing catch up with it, and we'll have to see where we keep going. But but the bet we'll end up having here, I know we said earlier, hey, the market is now pricing in 4% at year end. I think now the discussion point coming up is, will they be at 3.75 by year end?
So that must mean the economy is flying, according to our dear leader's deputy. Sorry.
That's an announcement. That's the announcement. I think that's what the Bank of Canada should do from now on. When they need to do something,
God.
You have the theory. And
Rich, they're all... Dude, this man.
This is going off the rails.
They're all tweeting the... Did you see the report from the IMF?
No. Which one? Which one? I mean, there's lots.
The whole liberal cabal there has been tweeting the IMF growth forecast for 2025. It's like Canada's expected to be like the leader in growth in 2025 or something like that. And obviously it's just nominal GDP, which is, you're gonna bring in 8 million people into the country. Obviously number is gonna go up, but everyone's tweeting that and cheering rate cuts as if this is a sign of economic prosperity. Yeah, tough times. I don't know.
Well, I mean, the thing that what we should talk about, there's on the Bank of Canada website, there's loads of really, really cool reports. If you're a nerd like me. And once a quarter, the Bank of Canada publishes the monetary policy report. This one was in July, the previous one was in April, etc. And I really love going through it because it sort of shows you what I don't know. They discuss all kinds of things. They discuss the global economy. They discuss the Canadian economy. They have their projections for GDP growth, what they think is what they project. They have a forecast for inflation, which should be taken rather, you shouldn't take these forecasts too seriously. But they do also talk about specific subject. So each monetary policy report, they'll have 1 or 2 boxes, is what they refer to, where they kind of dive down into a specific subject. In the past, that's where I've gotten really great data on vacancy reports. They talk about the changes to the economic projections. That's box 1. Box 2, you'll be happy to know, Steve, where they talk about sort of the key inputs to their projections. And one of the key inputs is the net flows of non-permanent residents has been revised up. So this one's about population growth and how that population growth affects inflation and their projection numbers on GDP and growth. So Ben Rabideau, who's been right about a lot of things, is definitely wrong about this, which was he was super confident. He was super confident that the population growth would collapse to negative or zero. I can't remember exactly what he said, but needless to say, the Bank of Canada is not taking the Canadian government's word for it and is revising up their non-permanent resident projection over the next little while, suggesting we won't.
Just for context, they're still projecting, obviously, that
collapse.
That growth is going to slow significantly.
And
I think Ben's projection was, population growth can go from like about 1 million, call it million people, to about, I think he was like 250, 300,000.
Yeah.
And I'm just teasing. I'm just teasing him. Yeah. We love him, but
just like good-natured ribbing. I mean, we're still growing, and we are gonna. I mean, according to the Bank of Canada, we're gonna collapse, which is exactly what Ben said. It's just that we're starting to see their particular forecast starting to be pushed out higher and higher, and that means that they're, as Keith, referenced before we started. I think that there's a bit of a schism. I don't think that there's. I think that when you put in there's two boxes. I'll get to the second one in a minute. When you have two boxes directly addressing one of the key policy issues we're having in Canada by people as sober as the Bank of Canada, I think it's a shot across the bow. And you have to. These are, these are economists. They're statisticians, and they're meant to be apolitical. And so I think they've done this as gently as possible, in the same way as we've had the Auditor General be very mindful and careful with their words when articulating the issues we have with procurement in Canada and the ArriveCan app and all the jokes we made around that. When you have these really sober technocrats say, hey guys, there's an issue, I think it's actually what it is. It's a be-doo, very loud warning to say that the policy levers have been are unaligned or misaligned. And so the box 3, just to finish my little rant, is assessing the impacts of newcomers in the Canadian economy. We've talked about the immigration stuff. And again, it shows what we've talked about a lot. The increase in housing demand from newcomers is being felt across all types of housing. And to quote them, said the largest initial impact tends to be in the rental markets. And we've seen, even though, Steve, you made the point that rental numbers are coming off, we know who gets affected by rents the most, which is working class people. And it's just really interesting that they've been so strong in their language, really, about what's going on and the effects of immigration in Canada.
Yeah, I got two thoughts on that. Sorry, Boomer, I got to take over here. One of the reporters asked Carolyn Rogers that question about, housing, and she basically said, a couple rate cuts here isn't going to, materially improve affordability. It's a structural problem. It's been ongoing for a number of years. And she basically ripped into, I think she ripped into immigration as politely as she could, but she was clearly like, someone else has got to figure this out, and it ain't our problem.
Is that that's I remember that too. Yeah,
she was getting heated. You could tell.
And
well, it was 2. What was the first one? What's the second one, Steve?
Well, the other one, it's funny enough, I know we talked a little bit about it last week, but in Tiff's comments, he flagged upside risks in shelter inflation. So he says, well, again, we're not predetermining a path for rate cuts. We're concerned about shelter inflation, upside risks. And I'm kind of thinking here as a guy in housing. I know we talked this last week, but I just don't see it.
Okay.
I mean, in real time, rents are declining in many major metros other than Alberta. Toronto rents are declining. Vancouver rents peaked 12 months ago. It's 2 major markets, Montreal, Ottawa. Resale home prices, I think everybody knows where those are going. They're going lower. Pretty much across, again, most major metros in this country. And so I don't know. It was just fine. I found that kind of interesting that he's concerned about the upside risk and shelter inflation, and I just don't see it.
Sorry to interrupt the show. A quick message from our sponsors. Ever been lost abroad searching for Wi-Fi and all you found was frustration? Introducing Saily eSIM, the ultimate travel companion brought to you by Nord Security. With Saily, you can avoid outrageous roaming costs. Compatible with both iOS and Android, Saily is so easy to set up. First, download the Saily app and install your eSIM with a simple tap. It's quick, easy, and hassle-free. Next, choose a plan that suits your travel itinerary, whether you're off to London, Mexico City, or visiting Rich's family in Portugal. Saily is a plan for over 150 countries. And with a variety of options, you can find the best rate that match your needs and the duration of your trip. Activate the eSIM before you travel and connect instantly when you land. No internet required. This ensures you're ready to go as soon as you arrive. With Saily, you stay connected wherever you are, cut those fees, and enjoy 24/7 chat support. No more waiting in airport lines or dealing with sketchy SIM card sellers. Just download once and you're good to go. So easy, even the boomer can do it. Go to saily.com/LoonieHour and use the code LoonieHour to get an exclusive 15% off your first purchase. Link in the description below. And now, back to the show.
All right, well, what let you know you think he's an idiot.
Maybe he's bullish. Maybe he's buying more pre-sales. I don't know what's going on here.
There's something happening. But Rich, you refer to yourself as being a nerd for all the information you're sharing with us. Then, just to be clear, you had 3 dates at one party.
Come on.
I don't think a nerd is going to have one date. So let's remove that description of yourself. In Nova Scotia, like into this along the lines of foreign students coming in, population growth, and all that. 2 universities in Nova Scotia, like they've had to have 40 to 50 layoffs of staff. Their budgets have been just completely crushed because of the number of foreign students they're going to be allowed to bring in. But it got so bad that 2 of these universities this week received approval to bring in more foreign students than what they were originally allotted. So again, it goes back to, Ben was suggesting, hey, this is going to be 0 or negative. And I think at the time you said, well, let's see how they do with execution. But things did get so bad for these 2 schools that they had to make exemptions to say, okay, there will be less foreign students than what was originally budgeted or forecast, but they're allowed to bring in more than what they were originally told. So where's the backbone with it? Along this line, someone I know, they just recently moved into Nova Scotia, and they need a doctor, right? They need a GP. And I don't know what it's like anywhere else, but it is so difficult now to find a doctor. And it goes into this population growth, theme. So I was doing some research yesterday, and I think there are about 48,000 GPs or family doctors in Canada. And the average patient load, and it can change. Some are quite high and some are low. But let's just say there's just rounded up to 50,000 doctors out there, like family doctors. And let's just say the average doctor has 600 patients on their book. So what's that number, Rich?
I don't know. I'm writing it down.
Anyone? Bueller? Steve?
No. Go ahead.
50,000 times 600. Anyone?
Yeah. Okay.
Let's just call it 30 million, just to go make it round.
Got it.
Or, if they have 7, it's 35 million. But so the population of Canada is now what, 42 million?
Yeah, 41 and a bit. Yeah.
41 is probably 43 million today. It keeps going up.
We're recording on a Thursday. Tomorrow it'll be 44.
Yeah. But we're talking about the impact on housing and supply and demand and rents and everything, and and the universities. But I just want to bring this full circle. It's also had this incredible impact on the ability of Canadians to get, it's not free healthcare because we do pay for it. But the quality of life for a lot of people in Canada, it's not what we expected it to be, or we were told it should be, because there wasn't a lot of planning going on with their population growth. And again, I think a lot of people listening to this will say, yeah, I know this person, they can't find a doctor, and that person can't, and everything. So yeah, it is coming across in all markets.
Just 2 quick points. I think we should also contextualize it, because often we forget about the actual numbers. So from 1973 to 2000 and let's say 13, the average roughly was an intake of 400,000 people, and that includes people dying, sadly. It also includes births minus deaths. Sorry, so birth minus deaths. There's other reasons why you might leave Canada. So you might, go to the US. There's permanent residencies and non-permanent residents. And all basically, if you look at box 3, page 14, the monetary policy report, it has the data until 1973. In 2016 or whatever, 2015, that number started an upward trajectory, only paused by COVID, and then it's now triple that number. So we'll say this over and over again, because I feel like one day, if Loonie Hour really makes it big, people are going to comb through these podcasts and talk about how we're anti-immigration. No one's anti-immigration. It's about having a plan, and it's about not tripling the number without a commensurate increase in doctors, infrastructure, schools, housing, blah, blah, blah. And to that point, in the box 3 again, just to round this home, and I'll pass it over, it says, there's also difficulty getting foreign credentials, and experience recognized in Canada also often results in newcomers taking jobs where their skills do not match those that are required for the position. This potential mismatch also weighs on productivity. And we know that Carolyn Rogers, my favorite, had a whole speech on that, which we covered on the Loonie Hour podcast. And this explains a lot of the productivity issues.
Steve, how many realtors have been created over the last 8 or 9 years?
We need more.
More.
To that point, though, there is a really good chart here from the Bank of Canada, again, in the monetary policy report. You hear a lot of people throw stuff out there. Well, these immigrants, they come here, they're all poor. They're just, how they're not impacting the rental market. It's like, well, no, first of all, they're going to go into the rental market. Second of all, because I see it in my business, a lot of them do end up in the home ownership buckets as well. And so the Bank of Canada put out a really good chart here showing home ownership rates among immigrants by years since they've arrived. So they come to Canada in basically year 1, almost none of them own a home. And then as you get into years 2, 4, so as you get into kind of years 2 and 4, your home ownership rates get close to around 30% of them start owning a home. And as you get pushed further out, around year 10, you get to about 60%. So again, it takes them a bit of time to obviously establish themselves, but in general, that's what the data is showing from the Bank of Canada. So they're putting pressure on the rental market, and they're putting pressure on the resale market as well. And I would argue this is like, Rich, when you have a whole bunch of immigrants, you have 1 million people a year coming to this country. So you put upwards pressure on rents. Those rents are a function of the revenues that investors are using to make a decision whether they want to purchase another unit, right? If the rents are going up 10% a year, investor might say, hey, you know what, maybe I'll buy an extra condo. So like the rents ultimately feed through into the resale market, directly or indirectly. And so I think that's important to highlight.
Yeah, but it also tells you that those immigrants are contributing members of our society. So it's, again, there's nuance here, which people insist on not having. But those immigrants if they're buying houses, that means they're employed. That means they're paying taxes. That means their kids hopefully are going to school, and maybe one of those kids will be a doctor, God willing, or maybe not. But the poison is in the dosage. And hopefully we'll share this chart. I've shared it on Twitter. It's on there, and you can see it's the trebling of inflow. We've literally tripled it. We went from 400,000 to 1.2 million. And had we gone from 400,000 to 600,000, we'd have to have something else to talk about. You know what I mean? And I think it's really interesting that the Bank of Canada is now starting very much to hammer this point home. And that's what it is when they put it in these monetary policy reports.
So we've got this. Well, yeah, I mean, I think we've got this scenario now to kind of round it all out and summarize it. The dovish central bank, we've cut rates twice now. Looks like we're going to cut rates at least another 50 bips as per the markets. We'll wait and see, of course. You had retail sales in Canada last week, which were horrendous. I think falling in 8 of 9 subcategories. Yeah. There's been exactly. one month this year where we've had any growth in retail sales.
Yeah, and that's basically a statistical anomaly,
And then
the trend is flat.
Again, and this is not on a per capita basis, right? So your population's growing by, call it 3%, and yet you're still seeing a contraction in retail sales. I think really summarizes the point that, Tiff's probably not wrong to be concerned about excess supply because the demand is not there. And so I think the path for the Bank of Canada is the Canadian economy realistically does need more rate cuts to keep this thing afloat. But Keith, can they do it? I mean, US GDP came in today, not bad, a little bit higher than expectations. Is the Fed going to cut in September? Are they not going to cut? I don't know. I'm curious your thoughts. I mean, again, I'm trying to imagine a scenario where the Fed doesn't cut. Maybe they don't cut this year, and the BOC, let's say, was still to move another 50 bips.
So what I just like then,
What
Rich,
does that look like?
So Rich, we just heard Steve, the realtor, say, yeah, we do need more rate cuts. We need rate cuts.
Cut, baby, cut.
So your
resale market's still
are you feeding Doug Ford his talking points?
On the payroll, bud.
So guys, we got Mrs. Icecap just came into the room. Yeah, she's going to come over and say hello to everyone.
No,
are
you
she
in
isn't.
trouble?
No, that won't happen. But I don't think, Steve, this is going to be a soft landing at all. I mean, as soon as think about it, we've gone from having no rate cuts. Maybe we might cut rates. Okay, we'll do one. Let's do another. Yeah, enjoy the moment, everyone. They're announcing the rate cut on the ferry coming over to. We might do two more. We've had the economy suspended for 10 years. There's been no price discovery in a lot of markets because of all this liquidity pumped in with zero rates, negative rates, and all that stuff. So it doesn't mean it eliminates this business cycle. It's just delayed it. It's suspended it from, actually showing its teeth. Now the teeth are coming up, Rich. And I think Steve there in the top left corner of my screen, he's going to have to go out there and tell a lot of people that, hey, it's one thing to have rate cuts, but I think the actual employment level and the ability of households to pay this debt or even qualify for new debt. It's, again, don't get excited with rate cuts. You actually want to see rate hikes coming through. That would signify that, hey, it's a strong economy. Or it can be an economy I think we're actually going to have where inflation is going to all of a sudden go higher again and the economy is rolling over. But, the positive scenario to this, it's not there.
Sorry to interrupt you, but it's with a much lower dollar, right? I mean, I don't know. I always look at the pound because I lived in the UK. We're basically almost a 5-year high on the pound versus the Canadian dollar. I should probably look at the US dollar more often, but that's the other side of that, Keith. And I agree with you that there's a real risk there.
UK condo's looking pretty good.
Yeah,
good hedge.
Yeah, we're nearing a 5-year low or high depending on how you flip the currency. So 138 on the Canadian dollar. It's. The last time it was that high was, May of 2020. So
Canadians are not gonna be able to vacation.
You have to staycation. We're gonna go to Ben Rabideau's place.
Yeah, we're gonna go to Ben's.
Tickets will go on sale for that soon. I think it's $14.99 a night at Ben's place.
That's right.
Okay, so we've bantered. I think the message is clear right now in Canada. The economic data is starting to tell us that it's rolling over. The Bank of Canada is telling us starting to roll over. Citigroup is saying, hey, it might roll over so hard we might get a 50 basis point cut. One thing we didn't share with everyone, I think over the last 2 weeks, we've received really nice emails from listeners sharing with us what they were seeing on their ground.
Yeah.
And we've probably had 3 or 4 recently, guys, where it's from the perspective from small business owners. And they're saying, yeah, we're starting to see the slowdown from their eyes, on their desk in the business that they're doing. And we're not seeing anyone that are saying, yeah, things are flying, things are going great. So again, these are all data points that we take into, and it has to run its course, and that's not bad. But the really great thing, though, is that there are a lot of investors out there with cash on the side. Really smart companies are building up cash, foreign investors as well. And as soon as we do get a perceived, correction or sell-off or, mark to market in Canada, it probably won't last long because there will be money coming in, to buy up that nice condo in Kitsilano or a
Especially
piece
with
of
the cheap
land.
Loonie on a cheap Loonie as well.
Yeah, or a piece of land up in Tremblant or something like that. So don't get too nervous about it if you're positioned correctly.
There's one thing I wanted to talk about that I feel like is not getting any play on the press, which is the shipping rates. And I know this is totally off board, but I've been meaning to talk about it. And it's there's obviously, the Houthis are still sort of, there's still bottleneck in the Red Sea, and that's going on. And for a while, for most of 2024, that wasn't affecting anything. And this will affect the Canadians, and I'll explain in a second. But now shipping rates from China to Northern Europe, which usually go through the Suez Canal, are being forced through. They had to go through the Cape Horn and Cape of Good Hope, excuse me. And what I'm saying is, though, what's happening is for a while, there's a lot of excess supply in the shipping industry. So by forcing people to go around South Africa, you basically take 20% or so of the shipping capacity out. And for a while, that was okay. But now we're starting to see shipping costs from China to Northern Europe, and by extension, from China to, let's say, the Port of LA and the Port of Vancouver and all these other major things. And why does that affect Canadians? Is that with a cheaper currency and more expensive shipping costs, it's going to mean that all of the goods that we import, and as we've talked about here before, we import a lot of our consumer goods from the US, but by extension China, and and part of Asia. And so you have this we have this situation where we can have weaker and weaker growth, but inflation for goods can start to ratchet higher. Keith, and that's what I think you were talking about. I reject the term stagflation, but it's sort of stagflation light.
How do you know how to respond to that, Steve? What do you...
Well, see, you were talking about the worries that we have with respect to inflation.
Yeah, you're right. Yeah, you're absolutely right. And Steve's been talking about a lot as well. The relief valve, it will be the currency. Maybe we'll have a headline, Canada has the weakest currency in the G7. Yeah, maybe that.
And then Freeland will tweet about how good that is. It's cheap. This means it's good, right?
And then it'll say, "Oops, it seems like this tweet is missing," or something like that. After it's deleted. But it's a part of a normal cycle, part of a normal economy. But as long as the American economy and it stays strong and their cycle is not aligned with ours and the rest of the world. And by the way, Germany had some really bad economic data. I think it was out yesterday or today. I don't remember what it was. The longer that happens, it just further increases the probability, that non-US dollar currencies, come down pretty hard.
When's the ECB on deck next? They're expected to cut as well.
Well, the Americans are out next week, so we have the Fed next week.
They're not expected to cut, to my knowledge.
Correct. And the ECB, it looks like they will cut in September. Let's just go through the Fed though. So they have 4 meetings left for the rest of the year, and 3 before the election in November. But right now, the market is expecting the Fed to cut by 50 basis points over the next 3 meetings
before the election.
Yeah. So no cut next week, but then the next 2 in September and November, it'll be 2 50 basis point cuts, and then potentially 1 more in December or January. So the Americans could be at 4.75 or 4.5 by year end or January. But they've been saying this now for a year.
Yeah, exactly.
Remember? and the longer the economy stays, some data points are quite weak. Other points are quite strong. Like the GDP number this morning for the Americans was quite strong. Yeah,
but that's like a very mixed message over there right now with all the data points coming out. It's like one week it looks horrible. This week you get a higher GDP.
Yeah. It was also core durable goods also came better than expected, and it's a weird one. Steve, I think you're right. I think it is a lot of mixed messages.
Steve, Rich, do you want to jump into the German data that came out? Did you see it?
Yeah, so it was just the IFO. The one I'm looking at is the IFO Institute, and it was really not good. It was less than expected. IFO? So IFO Institute, don't ask me what the acronym means. I don't know. I don't know what I don't know what the word IFO means, but but
It's
it's
important.
basically a business. It's a very important. It's like the PMI. It's like the ISM PMI, or the Ivy, which is an excellent school, by the way. One of our Loonie Hour listeners wrote me a very stern email talking about the Ivy School of Business is the best business school in all of Canada, and I should know more about it. But just anyway, there you go, pay that off. But yeah, so the German IFO Institute, they do all kinds of stuff. They do surveys on manufacturers, builders, wholesalers, retailers, blah blah blah. They do a forecast of what's going in and out, in terms of like, are you hiring, are you firing, are you doing, capex or whatever. They survey 9,000 or whatever, I can't remember the number of companies, and it is a key sort of indicator on like basically pessimism and the performance of their economy. And of course, it's all about forecast versus expectations, and obviously the direction. And so we're starting to see basically, we had sort of an improvement towards the end of the spring, and that improvement is starting to roll over, even though natural gas prices have come off, and et cetera, et cetera. And so it's yeah, for the most important economy in Europe to have their main economic sentiment indicator sort of roll over again, even when they're already doing kind of shitty, it's a sort of a red flag.
So it's important because now we're seeing, we're getting slowdowns in Europe and here in Canada, of course, and elsewhere. But the American data, it's still more positive than negative.
Yeah.
It's not completely one direction. I mean, obviously there are some data points that are weak that's happening, but it continues to create this scenario where not only does the U.S. market appear stronger, which means that the Fed, maybe they don't have to cut, which creates a difference in the interest rate. Widens the interest rate differential, which is important. But it potentially creates a situation where if Canada does roll over harder, or the Europeans roll over harder, that could trigger an economic event which pours even more money into the US, which is going to increase richest shipping charges and stuff like that. So these are the points to talk about. I remember we had Michael Nicoletto on a couple of weeks back talking about China and all these things. Again, like we always just, we encourage everyone, to look beyond Canada for clues as to which way the world is headed. And to be very clear, the world is weakening, and the US is not weakening as fast as everyone.
That's a good place to summarize it. I was also wanted to run something by you that's kind of been flagged to me by a bunch of our listeners here. But there's been some notes about the Bank of Canada's repo. I mean, some people are trying to call it a repo crisis, requiring $16 billion of liquidity injections just the other day. So, Keith, I don't know. I'm not an expert enough to have a strong opinion on this. I don't know if this is anything that you've got your eye on. Is it concerning? Is it not concerning? Do you have any opinion on this? Something going on here? Is this just noise?
Oh yeah, for sure. It's not. It's never just noise. I mean, normally. So what repo means, the repurchase agreement. Normally, like at the end of every day, banks have to either borrow from the Bank of Canada or from each other. And when you do that, you post collateral. So, Steve, if you lend me $10 million for one night, you're going to say to me, okay, what do you have on your balance sheet that you can pay me back in case you can't pay me the 10 million tomorrow? And so at the end of the day, in every banking system around the world, this happens every night, and it all nets out to zero. I'll lend you money, and then you lend money to Rich, and he lends it to me. We go around like that. There are occasions when, Steve, I need to borrow, say, 10 million from you, and you say, well, I don't like your collateral. So my collateral will be my mortgage book or my loans to, corporate, non-financial corporate institutions and things like that. For whatever reason, you're saying, hey, Keith, I'm not that confident that you're going to be able to pay me back tomorrow. And I say, hey, I'm Boomer. Come on, I'm going to pay you back. Right. But, all of a sudden then, though, I still need $10 million for the night. And you're saying no. And then I call Rich, and Rich is out on a date with 3 friends again. And he's saying, no way, I'm not lending you money. So then I got to go to the Bank of Canada. and they have to lend me the money, because if not, I'm in trouble, right? I'm in trouble. So you have this situation taking place. You're never able to tell specifically who it is, and unless you see other clues around the market out there. I'm not seeing anything yet, but it's not noise. It's not something, don't worry about it, pal. Hang in there. You'll be fine. It's none of that. It's definitely something happening out there in the system, and you don't know, is it just one institution that needs help, or everyone needs help? So back during the 0809 crisis in the US, everyone needed help, right? That was very obvious at one point. And even same with when the pandemic rolled along as well. So yeah, Steve, this is something people should be watching and following. Again, it doesn't mean that, hey, there's an institution in Canada is in danger of having a really awkward moment here. It just means that someone is not quite trusting someone else at this point. That's my take on it. So it is something
I'm curious how much like a guy like Tiff Macklem kind of uses this to weigh his decision-making process.
Oh, 100%. Yeah, absolutely. I mean, so we talked before. Yeah, I mean, last week, when Rich took that sucker Twinkie bet, Rich, you knew they were going to cut. Everyone, even you knew it, but we knew you wanted a Twinkie.
It's how we make it's good television. I need to, it is contrarian.
Yeah. Tune in for scenes for the next episode of the Loonie Hour.
That's right.
But
Rich is
back
gonna be
then,
300
we even
pounds.
with 0 dates.
Yeah, that's right.
But we did comment last week. The Bank of Canada, I think they're chatting with commercial banks. What's your visibility? What are you experiencing and stuff? And because sometimes you can have central bank make a move that's not been expected, where in their mind they're saying, oh wow, we have more information than you guys do. So I'm not suggesting the Bank of Canada, they what is it, the panic button that you refer to, Steve, sometimes?
Panic pause?
The panic pause or panic cut, whatever. I don't think that happened yesterday, but they are aware of it. I mean, they if they're not aware of it, then there's somebody asleep at the wheel.
But it's also their job. So their job is to be is the lender of last resort. And that's sort of the euphemism that we throw around in our world, which is that central bankers are the lender of last resort. And as Keith mentioned, these banks go to what's called a discount window. And so now you can use those words when you're at a bar and you want to pick up a girl. You can say, did you know the banks went to the repo market and then they took money from the discount window from the central banker? That's the lender of last resort. Anyway.
Is that what you use?
Yeah, of course.
Well, there's your pickup line. I think that's a pretty good place to end it. Boomer, I don't know if you have any sort of finishing touches on this, but
no, I think my Wi-Fi just froze then. So whatever really sharp point Rich made at the end, I completely missed it. But I'm assuming it was very cool. It was good.
I still can't believe that ferry driver announced over the airwaves the rate cut.
You'd be surprised. This is how they rolled over here on the island.
Man, people got a lot of house over there, eh? I've never been. I don't know.
I can't believe you didn't drive on the Confederation Bridge. That sounds like such a better way to get there.
No, the ferry, it's nice. It's somewhat romantic.
Okay.
Well, not really. It's doo-doo-doo. Central Bank has cut. Maybe that's a good place to end it, Steve. What do you think?
Man, that's incredible. All right. As always, we appreciate your support, and we'll see you next week.